Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special guest online, one of my personal friends, Steve Burns. We're going to be talking about negative oil. If it's never happened before, and my first thought was, I need to go to the smartest trader that I know, and that's Mr. Steve Burns. Steve, thank you so much for coming on the show today.
This is the How to Trade Stocks and Options podcast brought to you by 10MinuteStockTrader.com, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10MinuteStockTrader.com, Christopher Ewell.
The How to Trade Stocks and Options podcast is produced in partnership with my friends at FinClub.ai. I use the artificial intelligence data from FinClub as my primary indicator. I don't even take a trade if FinClub doesn't show me that I have a greater edge than any other traders in the market. You've heard the stats, 90% of traders fail, which is why you need to find an edge, and FinClub has that edge for you for just a few dollars a day. The returns produced by FinClub have been shown to be more than double that of the market, with win rates as high as 90%. I mean, they basically make it so easy. They're going to show you exactly what stock is going to exactly what price. Basically, they're handing everything you need to you on a silver platter. Listen, they are so confident that this will change the way you trade. FinClub.ai is going to give you 2 full weeks to test drive their service, and they'll even give you all their historical results so you can see exactly how it works and how it can dramatically change the way you trade. And that's exactly what I've done. So head on over to FinClub.ai to start your free 2-week trial, and I'll even throw in some extra bonuses after you sign up. Now, the only place you can get your discounts and free bonuses is at FinClub.ai. That's FinClub.ai.
Always good to talk to you, Chris.
Now, Steve, what in the world happened?
Well, that's that's the lesson when people say, well, it can't go to zero. There's a lesson that, oh, yes, it can go to zero, and it can go negative, which is just a reflection of supply and demand. And in this instance, even a reflection of a shortage of storage space and just nobody wanting it. I think the gasoline consumption has dropped in the U.S. I think over 30% since the quarantine has started. Some places completely shut down. Even around the world, countries in quarantine. And you can't keep feeding something through a supply chain for so long until eventually the supply chain gets backed up where the gasolines is not being sold at the pump, and the gasoline refineries aren't needing the oil to refine into gasoline, and it just slowly backs up. The planes, cutting back the flights for jet fuel in the world come to a standstill and drove it to a place where not only has the expiration and the May oil contracts came into play, nobody wanted to take delivery to the point where they're willing to pay you to take delivery of their oil.
It's absolutely unbelievable. I mean, this is an actual object, right? A tangible commodity. You can go and grab a barrel of it, and you can refine it and put it in your car and everything else, and it had gone to not just zero, but less than zero. I mean, it would be like pulling up to the gas station and they're saying, hey, here's $5. Let me fill up your car for you, and then you can leave, right? Whoever thought that anything like this could be possible?
Especially not a commodity like oil, which, remember, how many years ago was it? We thought there was peak oil, and oil was $140 a barrel, and thought we'd run out of oil. And not only not have peak oil, but that the year 2000 was the peak of gasoline and oil usage. And it's been declining since then. A lot of technology has replaced the need to travel and go places. Apps have replaced a lot of banking, and Skype has replaced a lot of, and Zoom has replaced a lot of business meetings and travel, and just a declining demand since for the last 20 years for really traveling. And oil is really tied to the traveling sector and industry. And I never thought I'd see a day though the supply chain would be so backed up that you literally be paid. The funniest thing, Chris, I don't know if you saw the morning of the May oil futures contract plunging dramatically. People were shocked it was crashing 40-50% early that morning on the day of the negative, and I tweeted out, well, I see strong support at free.
I did see that.
You did?
Yeah.
And it was a joke. I was trying to, that was purely a joke. And it went viral as it crashed below zero. And everybody, well, it was not supported at zero. It crashed into the negatives. the market wizard in my Facebook trading group that said, can they even trade in negative numbers on the futures exchange? I mean, how do you even execute trades in negatives when you're paying people? If you're short oil, they will pay you to cover your short by going long an oil contract to cover it. I mean, just unheard of in the oil space.
Yeah, absolutely. And you were talking about earlier the demand, right? You've seen flights. I think there's actually where I live, I can see a lot of airplanes flying to and from DFW Airport, and it surprised me the other day. I actually saw a airplane going over, and I was like, oh, I thought they grounded all flights, but it's something like 90+% less flights than previously. And all these people who are telecommuting now, doing all their work from home. I mean, we're really setting a precedent. We're teaching people how to work from home under these extreme circumstances. And I would imagine that once this is over, you've got this huge segment of the population that used to have to commute 30 minutes to an hour each way to a job that they didn't enjoy, and spend a tank of gas every week or two. And now they're going to be like, why do I need to do that? I already know I can work from home. I'm just going to stay home and save the gas money and save the time and save the headache of being in traffic. I could see this being one of those catalyst events that really just totally collapses the oil industry as we know it, from this huge, never stopping petroleum producing, OPEC. It's more all the time, to nobody's buying this, right? I mean, we've only had oil production and everything for the last 100 or 150 years, so it's not like it's been something since the dawn of time. But I could really see this having far sweeping implications for the oil industry for good.
Yeah, and Russia and Saudi Arabia couldn't pick a worse time to not cut production and get into an oil price war and try to drive people out of business by just, because their production costs in Saudi Arabia is much less than, some of the shale producers in the U.S. And, it's all about production costs. People thought there was a floor to oil prices was the cost of production, because once you get below the cost of production, you're going to drop production, and you should somehow have equilibrium with supply and demand. You're not going to keep supplying oil when literally the more oil that they're producing and selling to the market, the more money they lose if it's below the production cost. So that was supposed to be a floor, and of course zero was supposed to be a floor, but it really shows you anything can happen. And like you said, it's a change in behavior now with this whole pandemic, which the macroeconomic standpoint, to me, I trade price action, not my opinion, but macroeconomically right now, we're in the worst situation we've been at through the Great Depression, and in some ways worse than the Great Depression, because people can't go do certain things even if they want to, with 27 million unemployed in so many countries and states in lockdown and quarantine. And the fear, and like you said, just change of behavior. How many people were forced to go on e-commerce that never ordered from Amazon? Target e-commerce was up 275%. And like you said, people, find out that meeting could have been an email after all. They didn't have to travel for that business meeting. It could have been on Zoom or Skype. I think this is, like you said, forcing people to change behaviors. People, in the older age groups that never did do any of the technological things had no choice. And once they've learned that, then they've opened a new door. So like you said, you can see huge shifts in behaviors even when this ends, when they realize, they can live a different life. They can have things delivered to their door. They don't have to go grocery shopping. Amazon has grocery delivery in a lot of major cities now. With just one of many things. So I completely agree with you. It's a change in behaviors that could impact for the rest of our lifetimes.
And then also, you think about tourism, right? You're thinking about like Florida, where so much of their economy is based around tourism, and there is nothing there. And, I started to get really concerned when I saw the Cheesecake Factory, which, a funny story, my wife and I, we had a gift card, and I saw this news headline that said the Cheesecake Factory is going to stop paying all of their rent on April 1st. And my first thought was, I gotta go use this gift card. So I went there, and I mean, there's a line of people trying to, get takeout from there. So I know that there's still some demand. Of course, it's so much less than it was before. But I mean, just the hospitality industry, hotels, tourism. I mean, this is. I didn't realize that just shutting things down for 6, 8, 12 weeks would be catastrophic to some companies and some industries and some locations. Honestly, when you think about just how short of a time it took to unravel all these things, that's kind of scary.
Yeah, and this is something that they did do in other countries. They've tested this before in states of communism, where they shut down capitalists, don't let capitalists spend money, don't let capitalists make businesses, don't let capitalists create jobs, don't let economies function as a free market economy for supply and demand. And this is what happens. You have the government trying to figure out how to give people $1,200 stimulus checks, and what industries to bail out, what industries not to bail out. How to give money to small businesses and loans and grants, and we have seen very quickly and clearly, in my perspective, that politicians are not masters of economics. Even in the best of times, they run up deficits that are mind-boggling, and they don't achieve what they set out to achieve in most instances. And it really shows the dangers of shutting down an economy. And like you said, look at Italy and Spain, the tourism in Europe, France, Paris. I mean, that is their economy in a lot of cities over there. Like Paris, you shut down Paris for tourism, that's their economy's gone. And they were already fighting for increased pensions, and now they have no cash flows. Not to mention the U.S., the state income tax shortfalls of the states because people aren't working. They're having a municipal bond level issues where these cities and states are not getting their tax revenues. So we have systemic risk, and the oil is the first reflection, the quickest physical thing that you could see the entire economy shut down, how it's backing up supply chains across the country, and it's just one shoe to drop. I don't think we can even comprehend the systemic risk of this and what could break loose that politicians and planners can't even begin to imagine. The people not working, and people not. And I've heard the unemployment on the websites, you can't get through to file unemployment in states. It's just a complete nightmare, and most people didn't get their $1,200 checks if they didn't have automatic deposits somehow set up. So this is just a fiasco. I think oil is just a first domino in this if we do not get the economy reopened and get back to work and get all the tax revenue flowing and the customers and businesses flowing and capitalists putting their money at risk for gain. This is just, I think, step one of what could be a lot of dominoes. And the expectations right now for the markets is it is going to get back in going again next month. The plan, but it could be a lot different than what they expect. So just a huge amount of systemic risk. I think the oil going negative is just the first.
Oh yeah, for sure. So do you think? Because my first thought, and this was a couple weeks ago, was that there's going to be a lot of pent up demand. We're going to see all these people who want to go and buy things. Like in my household, we have a list of things that we're waiting out to go and buy. Do you think that there's going to be like a rubber band effect, or do you think that this will be more prolonged than? Well, I mean, you kind of answered that a minute ago. Do you think that it's going to bounce back quickly, or do you think that it's going to take a longer amount of time? Because I know for me, like, I want to go and spend money, but I got my stimulus check and I got my other, income and everything, and I'm sitting on it, and I'm telling my wife, we are not spending money right now. She's like, oh, I need new furniture. And I'm like, no, you don't. This furniture is just fine. Let's just make sure we get through this pandemic before you go and spend your stimulus check.
The greatest, most important fundamental in any market, which is another reflection of the oil market, is liquidity. That's the most important fundamental. And when you do not have tax revenues flowing into cities and states, and you do not have income pay flowing into employees' hands, you have 27 million unemployed, you have fear of the unknown. I mean, it's a real division of the haves and have-nots. Many of us, fortunate enough that, I was, already doing our own thing, already trading, already having online-based jobs or businesses. People, white-collar people are fine. They go home, they work from Zoom, they keep doing their job. They did it at office anyway. But people that work directly with the public, even Uber drivers, service industry, hotels, grocery stores, fast food, anything that's front-facing public, they've been decimated. They have 27 million people unemployed right now, trying to replace their entire ability to make a living with a $1,200 one-time check. So liquidity is going to be the problem, and that's the first problem with oil. You just do not have buyers even stepping in to take the oil. Much like the financial crisis when the bank stocks plummeted, Bear Stearns went to zero. There was a liquidity problem. I remember watching the real-time tickers in 2008 where financial bank stocks would just keep plunging and plunging. And like, where are the buyers? There was no buyers. There was no liquidity on the buy side. And if you don't have somebody stepping in to buy, then it's just going to keep going down. And that was the most extreme example I've ever seen with oil. It's liquidity, and I just don't see the liquidity. We are so far behind now. People don't have to go play catch up with a lot of things, and I don't see the fast bounce back like other people see. There's people right now waiting in food bank lines for 6 miles long and for 4 to 5 hours just to get food bank items. So it's people that the working poor and people that live paycheck to paycheck were severely hurt in this. That's what those protests are really showing throughout the country, where they've taken away these people's ability to make a living and replaced it with one $1,200 check and a nightmare to try to get unemployment from everything I've heard. So it's a liquidity problem, and it's really some people are sitting home watching Netflix, cooped up and bored. Other people are like, how in the world am I going to pay my rent? There's a large percentage of rents and mortgages already being paid right now. That's a liquidity problem inside of the real estate industry, not to mention all the malls are closed in most of these states and even countries, so they don't have the rents coming in. So this is one of the biggest liquidity crises I've ever seen in my life, maybe worse than the Great Depression itself.
Wow.
9/11 and 9/11, the financial crisis just seems so tame that I lived through versus this from what I'm seeing.
Wow. Man, and all this has transpired over a matter of just a few weeks. So that's the part that really boggles my mind. Going back to that, is just seeing how quickly it just unravels when the string is pulled or the fuse is lit. Just how quickly it falls apart. My first real eyebrow moment was not just Cheesecake Factory, but around that time was hearing all these restaurants closed and not just closed for the pandemic, but they're like, oh, we've been closed for a week and now we are shutting our doors permanently. And it's like, what? Already? Like, you can't not make money for a week? Like, that's just, it's scary to hear that so fast what we've built can be taken away.
Yeah, so many people, most people in the world live paycheck to paycheck, especially Americans. Half the people, even high income earners, they have their paychecks come in and they pay all their bills and it's gone. They start again, and without any of that, they have a liquidity crisis within 30 days in a lot of cases. And think about the sporting events closed down. I mean, how many vendors, ESPN advertising, everybody that works in those stadiums, all the restaurants around those stadiums. I mean, it is mind-boggling to think of the billions and billions taken right out of people's pockets with all the sports being closed down. And I will see. The big question will be: will people go feel comfortable sitting elbow to elbow with people in closed-in arenas and stadiums watching sports when this is over? How long will it take people to feel completely confident exposing themselves to this? Because the real fear, not even the fear, but the reality is, if you do contract this, if it gets through your immune system and you get knocked out and you go to the hospital, you're not allowed to have visitors. I mean, you will die alone if you get overtaken and go on a ventilator. Very, very, very low probability risk of ruin. Maybe 1 in 10,000, 1 in 50,000 odds, depending on where you live and how much exposure you have. But if you got a swimming pool full of M&Ms and you eat one, it'll kill you. People tend not to eat M&Ms out of the swimming pool.
Mm-hmm. Yeah, that's a great point. The medical profession, thank goodness for them taking care of the people that they are. But then, we've built up this very expensive, hugely dependent healthcare industry, and then to have that nearly shut down because of people like me, like I was just saying, you're not going to the doctor. You're going to have to tough this out. I mean, that's another thing that could be ripe for change, just like oil.
Yeah, have you seen the issues? Like you said, there's everything I've heard watching the news is doctors' emergency rooms with all dealing with the COVID-19 crisis. They keep saying, where are all the other patients? Where are the car wrecks and the broken legs? And where's the normal people with the normal flu? Where do they all go? But like you said, they're not going unless it's a life-threatening situation. And what's really odd is, the car wrecks and all the other kind of injuries, work injuries, are all gone because so many people aren't working and aren't out driving. So it's actually dropped the need for a lot of the basic things, unless they're having a stroke or a heart attack. Like you said, people aren't going. So now we have no action in the normal medical, the regular medical side of it. But a lot of people going on those medical ships in California and New York.
Right.
Because those people non-COVID-19, there wasn't that many people because, like you said, they're doing everything they can. Just the biggest thing that the politicians and the quarantine had to be done, had to save lives. They had to do what they had to do to not lose millions of people. No doubt about that. But the unintended consequences in trying to make the right decision and solve the problem versus just creating other problems and giving money willy-nilly to organizations that have nothing to do with this pandemic, instead of focusing on the people and human suffering of this. Is you just can't have one person making all the economic decisions. I think that's what we're seeing more than anything through this.
Absolutely, yeah, and it's crazy. We really don't know when it's going to be over with. I mean, obviously, I'm hoping for some sort of miracle and it can be done sooner than later, so we can all get back to some set of normalcy. But that normalcy is going to be different now, Steve. It's a weird thought, what's going to be there, what's not going to be there when we all emerge from our cocoons.
Yeah, I feel like we're going to be like the Great Depression generation. We're going to be like the pandemic generation.
Yes.
Where we say, no, don't go expose yourself to sitting right next to there. Just watch the game at home.
Yeah. Well, I mean, I don't even know what ESPN could be showing right now. What are they showing?
They had a Bulls documentary. I think it's called The Last Dance, where they show the Bulls. I don't know if it's the last season of the Bulls, and they had like 14 million viewers. But that's they're destroyed. I mean, how do they have advertising during this? There's, like you said, I mean, it's just so many unintended consequences that are like throwing a rock into a pond that it's going to take months, even after we start reopening, to even figure out. I think the oil was the canary in the coal mine, showing the lack of demand in that. If there's a lack of demand in oil, that they'll pay you to take it because they run out of storage, then that shows the slowness of the entire economy. Just like Disney stock, imagine what their earnings are going to look like with their theme parks closed down, their stores closed down, the malls. They're going to have, if it wasn't for Disney Plus, they could start having liquidity issues themselves and have to issue more equity or bonds. I mean, this is a liquidity crisis because of lack of economic activity.
Yeah,
and like I said, oil is the canary in the coal mine.
Well, Steve, I'm gonna wrap it up on that. That was pretty much exactly what we needed to hear, right? There's a liquidity crisis out there, and oil is just the beginning of it. So yeah, this has been quite a interesting conversation, Steve. I'm glad that you were able to make some time for me and the podcast audience.
Always great to talk to you, Chris. Hopefully we can see if they can figure this out. I mean, the Fed and the politicians are everything in their power to do whatever it takes to get us going again. So we'll see if the behaviors of people can match what they want. And this was a brief adventure.
Boy, I hope so. The sooner the better. Well, Steve, thank you so much for coming on. And Steve, make sure you stay safe out there. Don't be catching anything.
Yep, now's the time to manage the risk of health ruin very carefully.
Yep, well said. And thank you guys for tuning into today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode.
Hey, thank you so much for listening. And before you go, remember to head on over to finclub.ai to get your 2 free weeks of artificial intelligence stock picks. You've got nothing to lose and only the most advanced AI to help you trade with confidence at finclub.ai. That's finclub.ai.
10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice, tailored to any particular client situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10MinuteStockTrader.com/legal. And thanks for stopping by.